Welcome to Talk Tickers. We're diving deep into GoPro's first quarter 2025 earnings call today. Going to unpack the key insights, figure out what's really driving things over there.
Yeah, absolutely. And the big headline for Q1, GoPro actually did better than they thought they would. They beat their own forecast for revenue, earnings, operating expenses, and even hit a new peak for subscriber retention.
Okay, exceeding expectations. Let's get into the specifics then. Revenue.
Revenue landed at $134 million. That was right at the high end of their guidance, which topped out at $125 million.
And what pushed it to the high end?
It seems like stronger sell-through was the main factor. More products actually getting into customers' hands than anticipated.
Got it. And what about the subscription side? That's always a key focus.
Right. Subscription and service revenues saw a bump, up 4% compared to last year. And what's interesting there is it was mostly driven by a 5% jump in ARPU, average revenue per user.
So getting more from each subscriber.
Exactly. And that ARPU increase comes directly from holding on to subscribers better. Retention hit a record 70%.
70%. Wow.
Yeah, it's quite strong. That kind of recurring revenue really helps build a more stable base. Less reliance on just selling cameras every cycle. Investors definitely watch that shift.
Makes sense. So record retention is a big plus. What about costs? Did they manage spending?
They did. Non-GAAP operating expenses were down significantly, 26% lower year over year, landing at $62 million.
26%? That's a pretty hefty cut.
It really is. Shows they're serious about tightening the belt.
So with revenue up and costs down, what did the bottom line look like? Profit or loss?
Still a loss, technically. GAAP loss was 30 cents a share. Non-GAAP was 12 cents.
Yeah.
But the adjusted EBITDA loss improved quite a bit. It was nearly cut in half compared to last year, down to negative $16 million.
Okay, so still negative, but moving strongly in the right direction on that adjusted figure.
Precisely. That improving operational efficiency is a key signal, even if the GAAP number is still red.
And inventory, always crucial for a hardware company like GoPro.
Good progress there, too. They cut inventory by 27% year over year. It's down to $96 million now.
96 million.
Yeah, and what's really noteworthy is it's the first time since 2018 that they've seen inventory actually drop from Q4 to Q1. Usually it builds.
Interesting. So better revenue, much lower expenses, less inventory. Sounds mostly positive. Were there any weaker spots?
There were. Unit sell-through, so actual units sold to customers, was down. About 440,000 units.
Down from
530,000 the year before. They mainly pointed to weakness in the Asia-Pacific region for that drop.
Okay, APAC weakness. Anything else?
Well, the reported gross margin was 32.3%.
Yeah.
But that included a one-time $5 million sale of some older, slower-moving inventory.
Clearing out old stock.
Exactly. If you back that out, the margin would have been 35.5%. Which is actually better than the 34.4% they had in Q1 last year.
Got it. So a bit of noise in the margin figure from that one-time sale. Okay, let's dive a bit deeper. How are sales breaking down by channel?
Retail is becoming more dominant. It grew to 70% of their total revenue in the quarter.
70% through retail.
Yeah, driven mainly by the big box stores. So GoPro.com, which includes the subscription revenue we talked about, made up the other 30%, a definite shift towards traditional retail.
And you mentioned the subscription strength already, the 70% retention. What else are they doing there?
Well, that retention has been consistently strong, like above 67% for 6 quarters now. And their RPO remaining performance obligation, that also grew 5% year over year.
RPO, that's future contracted revenue, right?
Exactly. So that's growing too. They expect subscriber numbers and revenue to really pick up again when camera sales rebound, maybe in 2026. But for now, they're focusing on improving the experience, adding new editing features, better content management, that sort of thing, really nurturing that direct user relationship.
Makes sense. Any other strategic things happening beyond cameras and subs?
Yeah, a couple of things. They're pushing hard on protecting their intellectual property. There's a case at the U.S. International Trade Commission against a competitor over patent infringement. They're expecting a ruling on that in July.
Okay, defending their tech. What about the supply chain? Tariffs are always a concern.
Definitely. They're continuing to diversify away from just China to lessen the tariff impact. They're even looking at potentially producing some stuff in the U.S.
Interesting.
Yeah. They expect some tariff costs still, but plan to offset them with small price increases and this supply chain diversification. A key move was shifting camera production for the U.S. market specifically to Thailand. That gets them a lower tariff rate.
Smart move, being proactive there.
Seems like it.
And those cost cuts we talked about, the 26% drop in OpEx, where did that actually come from?
It's the result of the restructuring they started back in 2024. So reduced employee cost headcount is down 30% year over year.
30% headcount reduction. Wow.
Yeah. Plus lower marketing spend. And they finished a big system project, so those costs went away.
Yeah.
Partially offset by legal fees for that IP case we mentioned.
Right. So it's broad-based savings. But a 30% headcount cut, that's significant. You have to wonder about the long-term impact on innovation or marketing muscle.
It's definitely a balancing act they'll need to manage carefully. Efficiency now versus growth later.
Okay. Now, something completely different. They mentioned tech-enabled motorcycle helmets. What's that about?
Yeah, that was an interesting one. It's a new venture for them. They're partnering with AGV. They're a well-known premium Italian helmet brand. They're doing a joint development deal to create tech-enabled helmets. It's a move into a totally new market, a potentially large one.
Huh. GoPro helmets. Unexpected.
It is.
Yeah.
But partnering with a respected brand like AGV could give them a real leg up trying to enter that space.
We'll have to watch that one. Okay, let's look ahead. What's the outlook for Q2 and the full year?
For Q2, they're guiding revenue to about $145 million at the midpoint. That's actually down 22% year over year.
Down 22%. Ouch.
Yeah, but despite the lower revenue, they expect the non-GAAP loss per share to be only about 7 cents. And adjusted EBITDA is projected to improve by nearly $30 million compared to last year.
So better profitability even on lower sales?
Seems to be the plan. They're also targeting a 35.5% gross margin and OpEx around $60 million. That's a huge 36% drop year over year. And they expect to lower channel inventory further.
Okay. And for the full year 2025?
They're expecting both units and revenue to be lower than 2024 overall.
Why the decline for the full year?
They're citing the general macro environment, economic headwinds, plus increased competition, and also a delay in launching a new 360 camera.
Product delay impacting the numbers.
Right. But on the cost side, they expect full year OpEx to be in the $240 to $250 million range, which is an improvement. And the goal is to end 2025 with $75 million in cash and zero debt.
Okay, navigating a tougher year, but aiming for financial stability. You mentioned Asia-Pacific weakness earlier. Can you expand on the regional picture?
Yeah, APAC revenue really took a hit, down 54%. They called out macro issues and more competition, especially hitting them in China, Japan, and South Korea.
54% drop is massive.
It is. The U.S. market, in contrast, held up relatively better.
Interesting. Any thoughts on why the U.S. did better?
Could be a mix of things. Maybe stronger consumer spending here, or perhaps the competitive pressures aren't quite as intense as they are in some of those specific Asian markets right now.
Okay. And you mentioned that one-time inventory sale impacting Q1 margin.
Yeah, exactly. It pulled down the reported gross margin number for Q1, but the upside was it helped their cash flow and cleared out some older products. And they expect to reduce inventory even more in Q2, so they're clearly still focused on managing stock levels actively.
Right, getting leaner. And finally, pricing. Are they raising prices with inflation and tariffs?
They mentioned modest price increases, less than 5% globally.
Less than 5%.
Yeah, the idea is that this small increase should be enough to cover the remaining tariff costs, particularly on accessories, without scaring off customers. Seems measured.
Okay, so pulling this all together, if you had to summarize the key takeaways for someone tracking GoPro.
Well, first, the focus on subscriptions is real and paying off with that revenue retention.
Yeah.
It shows a shift to recurring revenue. Second, the cost cutting is significant. They're showing real discipline on OpEx. Third, the supply chain moves, especially shifting U.S. production to Thailand, look like smart ways to handle tariff risks.
Right.
Fourth, that motorcycle helmet venture with AGV, while maybe unexpected, signals they're looking for growth in new adjacent markets. But challenges remain. That big drop in APAC is a concern, driven by competition and macro factors.
Yeah.
And getting back to overall growth really hinges on their new product launches, especially with that 360 camera delayed. So 2025 and 2026 product execution is critical.
Got it. Lots to unpack there. Okay, let's shift gears for a second. Time for our This Is Not Financial Advice segment based on all this. Any wild speculative trade ideas bouncing around your head? Just for fun, of course.
All right, purely speculative blue sky thinking here, not advice.
Definitely not advice.
Okay, so we talked about the AGV partnership for tech helmets. And you see all the buzz around electric vehicles, electric motorcycles even. What if you looked at the companies really pushing electric motorcycles forward? Maybe consider a paired trade.
Okay, paired trade, long short.
Yeah, maybe long a promising electric motorcycle maker, one that could benefit from smart helmet tech adoption, perhaps even partner with GoPro AGV eventually, and pair that with a short position on a, let's say, traditional helmet maker, one that might be slow to adapt to this tech-enabled trend.
Interesting. So betting on the convergence of electric bikes and smart helmets and picking winners and losers?
Exactly. High risk, high reward, playing a theme based on that GoPro AGV news and broader trends in mobility and tech. But again, pure speculation.
Absolutely. A fun thought experiment. Okay, that wraps up our deep dive into GoPro's Q1 2025 earnings call. We covered the results, the strategies, the outlook, and even floated a wild trade idea.
Key themes were definitely beating expectations, strong subs, big cost cuts, and those strategic moves in supply chain and helmets.
Remember, this is just our take. Always do your own homework before making any investment decisions. What stood out most to you? What are your thoughts on GoPro's path forward? Feel free to continue the conversation online. We'll be back soon with another earnings deep dive. Until then, keep the tickers in mind.